Hello good people. This video here is about learning the basics in investing. Now, I'm going to go over a couple of my notes and we're going to get you started. What is a stock? A stock represents a piece of ownership in a company. Apple, Tesla, Walmart, Johnson & Johnson, Nike, Facebook, Instagram, Ralph Lauren. Anytime you purchase a share of stock, you become a shareholder, whether you're buying a fractional share or a whole share. Now, a fractional share is maybe like 10%, 15%, 20% of the total cost of a share. So say if a share costs $100 and you put $20 on that $100, you don't own a full share if the stock costs $100. You only own $20, 20% of the 100. You follow what I'm saying? But you can build like that. You can keep investing until you build up that 100 or whatever the total price of that share of stock is. You become a shareholder or a partial owner of that business. A share is a unit of measurement. The words stock and share are often used interchangeably. But if you want to get technical, stocks are traded in units called shares. Like I said, if you got, say if we're going to use Walmart. Say if this is Walmart. And Walmart got 5 shares. The hand is Walmart. Walmart has 5 shares. 1, 2, 3, 4, and 5. Say if you buy 2 shares of Walmart. That means you own 2 shares of that whole company. Follow what I'm saying? It's very simple, but it can be complicated if you don't understand. Stock prices can rise and fall. Let me give you an example. Almost anything can affect the stock's price. For example, is the business gaining or losing customers? How does it compare to its competitors? You know, companies that's in that same field. And how has it been affected by other parts of the global economy? You know, news affect the stock. You know what I'm saying? So it's basically, stock basically fluctuates on demand and need. You know what I'm saying? If something is a high demand, it's going to drive the stock price up. If something's in a low demand, it's going to drive the price down. So you can base certain strategies off that. One of the strategies I use, and I'm not a financial advisor, but I'm going to give you one of the strategies I use. When a company is strong and thriving, they got other businesses up under the umbrella, and they're not thriving in one section, I'm always looking to see how they're going to make that better. So sometimes when a product is not, you know, in demand, it's at a low cost. So that's a good way to buy something low, you know what I'm saying? And you got to look at the market on it. Look at from January to December. Look at every quarter how that share of stock has done in the past couple of years. You know what I'm saying? So okay, it might do good in the summer. It might do good in the winter. It might do good in the fall. You know what I'm saying? It might do good around Christmas time. It might do good around Easter. You know what I'm saying? So that can give you a little strategy on how you know, want to be interchangeable with your investing. So every person has their own unique way of investing. Is if you stay consistent and stay, you know, watching the charts, learning how these companies work, you will become good at stock investing and picking good stocks. Perception and reality impact stock prices. Pay attention to this. Okay, let's imagine everybody wants, let's say you own Apple. Let's say you own Apple stock. Let's say you bought Apple stock at, let's say $100 a share. Let's say you bought 5 shares, so that's $500, right? Now, just imagine all of a sudden, everybody want to start buying shares of Apple stock because the new phone coming out, or you got some kind of new chip or something coming out. You know, everybody want to buy that stock. Automatically, the value of your stock going to increase. So where you paid $100 for, it might increase to 120, 130, 160, 180, 200. It's depending on the demand for it. So whenever there's a demand for a stock that you already own, it's going to increase. Okay, let's use the opposite. Let's say if you paid $100 for it, and there's not a demand for it. You just a shareholder, just holding right now. You know that by this being a big company, at some point in time they're gonna come out with new product and they start going to increase. Well, what a lot of people seems to do, and once again, this could be a strategy for you. Remember, I'm not a financial advisor. I'm just giving you strategies I think of, that I do when I'm purchasing shares of stock. Let's say it's not a demand for it and it start losing volume. Like, let's say people start selling off their shares because they feel like it's not worth it anymore. You follow what I'm saying? So once that price start going down, you can make money that way. Even though the price you paid $100, let's say if it go down to $70, so you done lost 30% of what you put into it. But Walmart is a big company. I always look at the company. I look at the CEO. I look at how, they P&Es, they price and earnings. I look how they did last year. I look how they did last quarter. I look how they did, last semi-annual, how they did last year. So I always study the charts and see how they move, and so if it went down to $70, what I would do on my strategy is I buy more shares, because now people are selling them to me at a discount. You follow what I'm saying? When I bought them for $100, now I'm getting them for $70. You know what I'm saying? I know it's going to eventually, at some point in time, go back up to 100 and past 100. So let's say if it go back to 100, all the shares I done bought at 70, if they go back to 100, that's 30% gain I done made on my money. You know what I mean? Let's say it go to 150. So I done surpassed what I put into it to begin. I done made my money that I declined in. I done made money off someone selling their stocks because the prices dropped. You know what I'm saying? So I start looking at my gains. Okay, it's time for me to move money around, or either buy more shares, or take some of that gain and buy shares of this company, ABC, buy shares of EFG, buy shares of this company and that company, and that's how you flip it. That's how you flip it. It's not hard. It's just being strategic, building your graph and watching your portfolio on how your stocks move. That's all fund managers do for you. That's all they do for you. They say 401k, they manage your money for you. So they just making sure they're watching what's good and what's not so good at the time. But eventually these companies are still over and they're strong in the community, they're strong around the world, they're going to grow. So all right, check this out. You can trade when it's right for you. Think about this. As an investor in a company, you get to decide when you're ready to buy and sell a stock when it's comfortable for you. That's the beauty in it, baby. You don't have nobody standing over you to tell you what to do with your money. You can do it on your own. You can do it from your cellular phone. You know what I'm talking about? Or your tablet, your iPad, your Galaxy Pad. You can do it from your computer. Whatever you got to trade on, you can keep it in your hand as long as you got that internet connection, baby. You also can decide to do nothing and just let it sit, like MY do a lot. And once again, I am not a financial investor. I'm just sharing with you a couple of the strategies and things that I do. So, once again, investing is not hard. But check this out. Typically, investors have no obligation to do nothing. They can trade whenever the price is right for them. So meaning, if you bought something for $5 and it went up to $6, you can go ahead and sell it. You ain't got to wait. You can make that dollar profit. Or you can let it sit and, watch the market and see if it increases a little bit more than that. Sometimes it can go up, sometimes it can go down, but it's all on you when you want to sell it. You the decider of that. You got full control over your shares of stock. Mr. Pike. All right, let's do a little quick recap. That's it. You made it. This lesson was all about stocks. You learned that owning a stock means you have partial ownership in a company. So just imagine if you own all their stocks. But they ain't gonna never let you get all of them. But just imagine if you did. You have full control. You can tell them how to move. It's like chess, baby. All right. You also understand that stock price can go up and go down. So, you know, look for strong companies to invest into. You know what I'm saying? You can play around with them penny stock companies. You know what I mean? I think you need to know what you're doing when you invest into these penny stock companies, because some of them can be pump and dumps. And what I mean by pump and dump is they can be done got their SEC license to go out there and sell all these shares of stock, and they can close down. So I dibble and dab with those a little, because you can get paid highly off penny stocks. And I'm not saying all of them are pump and dumps, but some of them can be. Keep that option on the table. Be open-minded to that. Now, both perception and reality can affect the stock price. What I mean by both perception and the reality can affect the stock price. The news, something can happen over here, or something can happen in another country. You know, the president can say something. The vice president can say something. You know what I mean? Like, let's say, and this is just something just to be saying, it's not true. Let's say the president say, I'm going to start smoking more weed. What you think more people going to start doing? They're going to start investing in the weed stock. So sometimes influence of politicians, celebrities, that can affect the stock price too. And that's what I mean by perception and reality can affect the stock price. You dig? So last but not least, you get to decide when it's right for you to sell. And that's the glory in it all. Ain't that lovely? Not to have no goddamn boss standing over your shoulders. You know what I mean? You are your own boss. So they got books out, Learning Stock for Dummies. They got all sorts and sizes of books out. There's plenty of YouTube videos out like this one right here, just giving you a basic understanding of stocks. Right here in the description, I have links to Webull, which is an investing app. Robinhood is very easy to invest on Robinhood. Acorns, they invest your change for you. There's one called Titan. I have a link to it in the description below. And next we'll be talking about cryptocurrency, how you can get started in that, and I'm just going to give you a basic overview. And remember, I'm not a financial investor. I'm not a financial advisor. I'm just sharing with you what I do within my investing. Peace.